Hello, in this video I'm gonna walk you through the financial model Excel template. I will show you the main inputs, the core outputs, reports and charts. So let's get started. On the dashboard tab you may see the core inputs and core charts and financials, which are based on these assumptions. So let's start from launch date. Let's pretend that your business will start from the March 20. Then you can set up ramp up months, which means that there is some adoption rate curve for your business. If you will input, for example, 4, this means that in first month you'll have 25%, then 50%, then 75%, and in the month number 4 and going forward you'll have 100% of your capacity. Then under core input section you can input total available market in terms of leads by years. Let's pretend the first year is 200,000 and each next year it will grow for 50,000. Then you can input your target market share. For example, it's 20% and it will grow for 2% each year. So your target market leads is a multiplication of total available market and target market share, which is 20,000 multiplied by 20%, which is 40,000. Then you may see the traffic by leads, which impacted by your launch date and your ramp up. For example, if you start from January and ramp up months is 1 month, so your traffic by years is exact your target market. Below you may see the assumptions related to the customers and purchases, which is conversion rate leads to new customers. Let's pretend it 5% and will grow for 1% per year, 6, 7, 8, and 9. Then you can input some percentage of your repeated customers. If your customers tend to do repeated sales, for example, it's 1%, 2%, 3, 4, and 5 by years. Then you can input count of purchases per month per repeated customer. Let's pretend it's 3 purchases per month by years. And below you may find count of purchases by years as a total. Also on the Seasonality tab you may input your sales seasonality assumptions. For example, in January you have 25%, which means that you will multiply by 125% your average yearly sales amount. The same way you can input negative value. For example, if -10, it means that 90% in February will be your multiplicator for average monthly sale across the year. You may also zero out and you will not have any seasonality for your sales. On the Products tab, you may input the main information about your products. You can change the name of your product category, like category 1, category 2, etc. And you may see the sales mix, which you can change. There is also conditional formatting. For example, if in 2020 you will set up something wrong, for example 80%, this means that product E, which is 100% minus sum of 4 percentages for categories 1 to 4, and you will see this negative amount. This means that you input something wrong. If everything is correct and the total amount of 4 categories, for example like this, is less than 100%, that this cell will be calculated correctly and you will see it in gray color. Below you may see the total price per one purchase by categories in dollar amounts and COGS as a percentage of your revenue. The dashboard tab, after you immediately set up your core inputs, your seasonality assumption and your products assumption, you will see the revenue breakdown by categories and you already can see your revenue on profitability tab, and operating cash in, and also revenue on the core financials section. The first part of reporting section consists of income statement, cash flow, balance sheet, and the summary tab. Let's start from income statement. So on the income statement you may find total revenue broken down by products, COGS broken down by products, gross margin, variable expenses, salaries and wages, fixed expenses, EBITDA, depreciation and amortization, EBIT, interest expense, net profit before tax, tax expense, and as a summary, net profit after tax. On the cash flow statement you will find cash flow from operating expenses, cash flow from investing expenses, and cash flow from financing expenses, broken down by its subcategories. On the cash flow indirect you may find more collapsed view of cash flow statement, also broken down by operating activities, investment activities, and financing activities. And as a total, you may see the net increase in cash or cash movement. On the balance sheet, you may find current assets, non-current assets, current liabilities, long-term or non-current liabilities, and your equity. The summary of statements you may find on the summary tab. Here you may see the income statement broken down by years, by main categories, and to the right you may see the detailed year breakdown by months. For example, I can select 2021 and we will see all the P&L line items broken down by months. Below you may see the charts with presentation of main KPIs related to the income statement. The same idea for the balance sheet. You may see more important KPIs on the charts and on the line items breakdown. And the same idea for the cash flow statement. On the top of Financial Charts tab, you may see the revenue breakdown, broken down by products, and this information is presented for the 2 years by months and for the 5 years by months. Below you may see the chart for the cash balance, operating cash flow, broken down by cash inflow and cash outflow, breakdown of EBITDA, which is revenue, COGS, OPEX, and the resulting EBITDA you may see as yellow line, and also EBIT, also broken down by months for 2 years and for the 5 years. On the operational charts you may see the sales mix, which is count of sold units by products, and productivity charts, which is average revenue per day and average OPEX per day, broken down by 2 years and 5 years by months. Also, here you may see the workforce productivity, which is revenue per employee and OPEX per employee. On the benchmarks KPIs, you may find your main industry-specific KPIs, which are changeable for your industry, for your country. For example, gross margin industry benchmark is 60% for your country. You may see this changed on this chart. Industry gross margin is orange and blue. This is gross margin calculated based on model. The same way you may change profit margin, for example 20%. You may see it on the chart below. For the 2 first years you may find that your profit margin is less than industry benchmark, and starting from year 2022 you have bigger amounts than industry benchmark. Also you have wages as a percentage of revenue, average weekly revenue, and average weekly net profit benchmarks. On the top revenue tab, you may see the breakdown of your revenue by products and also by years with absolute values and percentage breakdown. The same information you may see on the charts below. Here you may see the percentage breakdown and absolute values breakdown. Below you may see the revenue depth and monthly run rate chart. You can select the year, and based on this year you will see the information of revenue by products as absolute values and percentage revenue breakdown on the pie chart. On the revenue bridge you may find the main revenue drivers of growth. You may select the first year and you may select the last year, and between these years you will see the waterfall chart, and you may see which are the main drivers of your revenue growth, which specific products grow faster and which specific products grow slower. On the top expenses tab, you may find the breakdown of top 4 expenses categories, and all other expenses collapsed into other category. You may see the breakdown of absolute values broken down by years with a total below, and also to the right you may see the percentage breakdown of these expenses. The same information you may see on the charts below, which you may find the percentage breakdown and the absolute values breakdown. On the couple of charts below you may find expenses depth and monthly run rate for selected year. You are able to change this year, and you may see the absolute values and percentage breakdown on the pie chart. On the expenses bridge you may find the main drivers of expenses growth between these 2 years. These years are also changeable, so you may select the first year and you may select the last year. And you may see that total expenses starting in 2020 will change to total expenses in 2024 by this waterfall. On the break-even tab you may find the calculation of revenue break-even level and break-even chart. For this particular use case, you may find that your revenue break-even level is less than actual revenue calculation. This means that company is profitable. On the Valuation tab, you may see the calculation of company valuation based on the cost of equity, which you may input here, cost of loans you previously inputted on the dashboard, calculation of resource share you may see here, there is also tax rate, and here you may find the weighted average cost of capital. In the valuation model there is 2 valuation methods, which is EBITDA multiple and revenue multiple. You may select one of them, and below you may input multiple of methods. Based on this information we can see terminal value, which is calculated on unlevered free cash flow. You may see the present value of unlevered free cash flow, NPV, and multiplicator evaluation for this particular company. The color coding in the model is very simple. You may change any yellow cell in any yellow sheet within the model. This means that this yellow cell has some input, assumption or driver which impacts the calculation within the model. Blue sheets means that on these sheets there are some charts, reports and other information which can be useful for reporting purposes. On the tabs without color you have some extra calculations related to revenue, to debts, equity, inventory and everything which is needed for the reporting. Additionally, you have Contents tab, which allow you to navigate across the model very simple. So you may click on any report and you can go back. It is broken down by reports, assumptions, statements and setup. There is short explanation about what each tab does, but if you want to know more, you can go to How To and to see more detailed explanation of what each tab does and what inputs you may find on this sheet and what kind of outputs you may find on this sheet as well. Any header of this section is also clickable, so you may click on, for example, Book Assets and you go directly to this tab. On the Wages tab, you can input your headcount by categories, with hire and fire date, with annual salary, with ability to input different number of employees by years, with annual salary rise percentage, with monthly bonus and tax rate. Let me give you a couple of examples. Let it be CFO, which you are going to hire in March 20. You're not going to fire him, so the fire date will be December 24. So annual salary can be $50,000, and this will be one CFO over the time. So you may see one CFO, which is one headcount, starting from March till the end of the model, which is December 24. Also, you can input 5% of salary growth rate. You may see the amounts by years connected to this annual salary and impacted by annual salary rise. Let's set up 10% monthly bonus and 5% of tax rate. So you may see below the calculation of salary broken down by months, monthly bonus, which is 10%, and 5% of monthly taxes related to the payroll. Another option would be admin account, which will start in April, which will grow till the end of the model with annual salary of $30,000. Let it be in year number 1, 2, then 4, 6, 8, and 10 headcounts. 3% of annual salary growth, 5% of monthly bonus, and 5% of payroll tax rate. So in here you may see total staff numbers, which is 2 for the year number 1, 2020. Starting from year 2021, you have 4, then 6, 8, and 10 in the last year of the model. Again, calculation of salaries for these two, in this case 4 headcounts, calculation of bonuses, and calculation of monthly based taxes. You may see an income statement, total salaries and wages, and here you may see the total amount of bonuses, payroll taxes, and wages for these headcounts. On the Fixed Expenses tab, you may input up to 15 line items for your fixed expenses. Let me show you how it works. For example, you have utilities. You will start pay starting from March 20 till the end of the model, which is December 24. You may see it here. Let's pretend periodicity will be daily with amount of $50 per day. So you may see these amounts in here. It is calculated based on count of days within this month. So obviously in March 20 you have 31 days. That's why you will have 1550. In April you have 30 days. This means this will be $1500. Also, you have ability to input some growth rate year over year. Once you input this growth rate, you will see that your utilities will grow year over year. Let me give you a couple of other expenses types. For example, advertising. Let it start in March and finish in August 24. This will be on weekly basis with amount of $100 without any growth. So starting from March till August 24, you have $400 per month, which is 4 weekly payments each month. And that's it. Another option is bi-weekly. For example, $500. You can start from July, for example, and you will have 2 payments, which is 2 bi-weekly payments within the month. $500 multiplied by 2, you have $1,000 per month. Again, you can input some growth rate and you will see that your advertising expenses will grow year over year till the August 24, which is the last date of this expense type. Another option, office setup, which can be one-time payment, which will happen in February 20 with amount of $5,000. Obviously you should not input any gross rates because this is just one-time fee, and you may see that office setup will happen in February 20 with this amount. Another option, insurance, let it be start from January 20 till the end of the model, and it can happen monthly with $1,000 per month, with 5% of gross first year, 3% of gross second year, 2% of gross third, and 1% year number 4. So you may see this calculation here. Starting from January 21, it will grow for 5%, which is $50. And starting from January 22, it will grow for 3%, which is additionally $32. Another option, quarterly. You may see that insurance will be paid $1,000 each quarter. You can start it, for example, from February, and this will be shifted to 1 month forward. Another option, semi-annually. In this case, you will have insurance payments once per half a year, again with a percentage of gross. And the last option is annual payments or yearly payments. You'll pay one time per 12 months, starting from February till December 24. For each expense type, you can use gross rate, and the calculation you may see in here. Also, in income statement, you may find total fixed expenses group. If you will ungroup this section, you can see these amounts broken down by months and by fixed expenses line items. On the variable expenses tab, you can input your variable expenses as a percentage of total revenue. Let me show you how it works. For example, bank fees. And your bank fees is 2.5% of your revenue. So in the same way as your revenue grows over time, you may see that bank fees will grow as a percentage of this total revenue. The same way you can input other variable expenses, like for example 5% direct labor, like 15% of total revenue, and below you may see the calculation of these variable expenses by months. So these expenses will be connected to the income statement tab, section variable expenses, and you may see these line items by months and broken down by expenses types. On the CAPEX tab, you may input up to 20 development expenses categories. Let me give you a couple of examples. So for example, office development with purchase date of February 20 with spending of $10,000. And you also can input payment delay. What does it mean? Let me set up 2 months, for example. It means that this amount will be accrued in February because of purchase date is February, but paid development expenses will be in April 20 for this office development. And you will have some balance of CAPEX accounts payable for 2 months. Let me give you another example. Other development expenses. Let's say March 20, $5,000 with 0 payment delay. This means that this amount is accrued in March and paid in March as well. The total amount of development expenses you may find in Assets tab. By default, it has useful time for 5 years for the calculation of depreciation. You may find calculation of depreciation for development expenses in here. Here you may also find capital expenditure and closing net book value. Additionally, you have up to 6 placeholders for other assets. For example, other assets with useful time of 10 years with cost of $25,000 and with launch date in April. You may find it in here. You can see capital expenditure. You may see book depreciation by months for these amounts, and you may see closing net book value. The total amount of depreciation you may find in income statement. On the cash flow, you may find cash flow from investing activities for these assets, and on the balance sheet you may find fixed assets amount under non-current assets and CAPEX prepayment and CAPEX payables as well. For the capitalization table, you can input different founders and investors' contributions, broken down by different dates of funding, with different cost of share for each series, and you can see the dilution of shares after each round, and pre-money total equity and post-money total equity. Let's pretend that we have two founders, founder 1, founder 2. So total amount of shares for founder 1 can be 10,000, for founder number 2 20,000. Let's imagine that cost of share will be $2 and the date of founding is February. This means that investment for founder 1 is $20,000, for founder 2 is $40,000. In total they invest $60,000, which you may see here. The dilution is 33 to 67% of shares. So let's pretend that for Series A we have one investor and the date of issuance is May. Cost per share is $5 per share and number of shares is 1,000. So total amount of investment will be $5,000. You may see that before the Series A total equity was $60,000, after is $65,000, and investor 1 will have 3.23% of shares, and the shares of founder 1 and founder 2 also diluted, 32.26 and 46.52%. You can also input some amounts for Series B and Series C. The same way you can set up the date, cost of share, and up to 5 investors is up to 5 placeholders for number of shares. The amounts of funding you may see in the cash flow, in the ordinary equity risings, and you may see the balance sheet, which shows you the total equity by months. Also on the top of the dashboard we have debt assumptions. Let me show you how it works. So for each debt you are able to select the debt type. There are two debt types in the model, which is annuity and usual. Annuity means that each monthly payment, which consists your debt repayment plus interest expenses, will be equal each month. In case if you will select usual, your main debt repayments will be equal parts and interest will be just interest on the debt's closing balance. Let me give you an example how it works. So you may input some amount of the debt, the launch date, term will be 60 months, and interest can be 5%. You may also input the grant, which is just simple amount, which is paid in some specific months, and that's it. No repayments, no terms in terms of interest. So all the calculations of the debt you may see on the Capital tab. Calculations for debt number 1, debt number 2, debt number 3, total debts with grants. These calculations impacts income statement, interest expenses, the cash flow, interest paid, debt drawdowns, debt repayments, and on the balance sheet we have the debt closing balance. On the top of the dashboard you have currency, denomination and taxes setup. So currency inputs means that you can input all your drivers for the model using one currency. You have currency outputs. It can be the same as currency inputs and it can be different from currency inputs. So let me give an example. When you input in United States dollars, you have euro as an outputs, and for this case you can set up currency exchange rate. This is 1.2 for example. In this case you will have in the model all your inputs in United States dollars, all your outputs in euros, and there will be conversion rate between currency inputs and currency outputs. Additionally, you have denomination, which means that you can denominate all your outputs on the reports. In this example, you have denomination is 1000, means that your outputs is denominated by 1000. You can select millions. You may see that now it is in $1,000,000. You can set also billions or without any denomination. Additionally, you have corporate tax setup. You can change this number and this will impact tax expenses in your income statement. I hope you enjoyed my video. Thanks for reviewing this. You can find more on my website finmodelslab.com, and we'll see you later in the next videos.